In case you didn't catch my last video I made about my portfolio, I talked about how in the last couple of months the companies that I own have seen pretty dramatic downturns. In the last couple of months you've seen companies like Chewy, like the ones I own, go down 50% plus, as well as my second largest holding iRobot, from its previous all-time high being well up around the $150 range, now being in the 60s. We have other companies like Corsair Gaming, which currently trade at around 20 bucks and used to be in the 50s. And then CleanSpark. At one point, CleanSpark stock was a $40 stock, and today it is $8. Now, these companies are doing great. We've talked about their fundamentals. We've talked about how they're growing revenues, they're growing profits over time will hopefully lead to a higher stock price, and it almost always does because the revenue and profitability for almost all these companies look beautiful. It looks fantastic. But we're going to show a bunch of different examples in this video of companies that you all know and love and show some examples of great fundamentals versus horrible fundamentals. So I hope you enjoyed this video. If you haven't got signed up with M1 Finance already, we're having a $50 promotion where you get signed up and you get $50. You just click the link that's down below in the description. I'm hovering it over my mouse right here. We've had 125 people sign up so far, and it's absolutely a free brokerage that's fantastic, and I 100% recommend them, and that's the one that I was just showing you the stock prices on right here. It's a great platform, and you totally should download it, and it helps support me and my channel. But other than that, guys, my name is Jordan. I'm a millennial investor. I plan to get to $1 million by the age of 40 by using these goals, including the one we just updated in our last video. But other than that, let's go ahead and jump straight into it. Now, what I'm going to show is I'm going to show some of the best performing stocks you all know and love. You probably know almost every single one of these companies by name. And what I intentionally did, if we look at the S&P 500, we all know the dot-com bubble that busted in 1999, 2000, and then the next couple of years, many growth stocks and tech stocks went down 50% plus. We all know the financial crisis of 2008, 2009. Pretty much all stocks, growth or not, pretty much went down 50% plus. We know that in 2020, because of the coronavirus and the pandemic, many of these companies went down 50% plus. And so what I wanted to do was ignore all corrections and all big downturns in the market and show you times where amazing companies have went down 50% or more completely on their own terms. Nothing to do with the market. The market was doing just fine, but they went down, well, simply because stocks go down sometimes. The first one is Apple. Now right here, if you see at the bottom of my mouse, you can see the date at the bottom of the chart. This peaked in 2012. Now in September of 2012 to, let's see, April, May of 2013. If we go to that time, let's go to September 2012. So it would have been right here to about May of 2013, April, May. The stock market went up about 14-15% in that time. Not only was the stock market not down, it was up double digits in that couple of month period. Well, Apple pretty much got chopped in half. It went from $25.18 right here at the peak and went down to $13.75. Now, looking into the future, where did that company go? We all know it uptrended, it uptrended, it uptrended, it paid dividends, and then we get to today's price of $168, and the other day just hitting a high of $182. Okay, that's one example. Let's keep going. We have Amazon. Now, once again, we're going to look at a time when the market was doing not too bad. We have, let's see, October 2003 to August 2006. Okay, right here. October 2003 to August 2006, which would be right about here. The overall stock market went up 22.85% in that time. That is a bull market. That is not a company, or excuse me, that is not a country where the stock market is crashing or in a free fall or we're in an economic recession. In the meantime, while this thing is going up 22%, the overall stock market, this company that you may have heard of called Amazon is getting chopped in half. It had a high of $61.15 in 2003, and over the course of the next 3 years, it would get chopped in half, going down to $25 a share through poor earnings reports and lackluster growth, and overall just what many would consider to be an overvalued stock price. Now, from hitting that low in 2006 of $25 a share, we all know what happened later on. We keep scrolling and scrolling and scrolling, and we get to 2022 to today's price of $3,065, and the other day it hit $3,700, and just in 2006 we were looking at a $25 stock. We all know how the story played out. We have another one. We have AMD. This one is far more far more than a 50% downturn. And this is a time when stocks were actually roaring. We have April of 2010 all the way to December of 2012. So let's go to April of 2010, which should be right about here. And then we go to December of 2012. What did stocks do from that time? We get to December, which would have been right here. Once again, a time when the stock market was actually doing quite well, was up about 17% over that time period. Now, this company, AMD, one of the best performers of the decade, went from $10.24 to $1.81. From that $1.81, what have they done since then? Well, they are now at an all-time high, or at least near it, at 113, and just the other day they're at 164. And we'll keep flying through these, but Tesla, you see the same thing. We all know the story of Tesla, one of the best performers over the last couple of years. This is a time, once again, when stocks were doing just fine from 2014 to 2016, $58 to $28, and you know how that went. It's now an $860 stock. The stories go on, but I want to get to companies that did not do well. I want to get to companies that did the complete opposite, that went from all-time highs and then hit new all-time lows, but have since then never really recovered. And that is due to lackluster fundamental businesses. Now, every company that we just went over companies like Apple, Amazon, AMD, Tesla, companies like these that had massive 50% plus downturns, but still became massive successes because they had great underlying businesses. Now let's look at a company that does not have a great underlying business, that went IPO in July of 2014 and has since then, ever since that all-time high right after the excitement of the IPO, has not only not seen all-time highs, but have not even gotten close. It hit that all-time high back in late 2014 of $98 a share, and the other day back in 2020 during the lows, it hit $2. Now it is, quote, roared higher, going all the way back up to $8, but look at the comparison from $8 from 98. I don't think I need to explain how dramatic this is and how bad of a performance it is for a company like this, and this is for a company that's still around and still has actual revenue. Let's look at another example. This is a company that was very popular and was the thrill back in 2008, 2009, and ever since the economic recession during that time period, this company has never recovered and has actually gotten drastically worse. Look at this time period during one of the worst downturns for this company was actually in 2011, 2012, which was actually one of the best time for stocks. The stock market bottomed out in 2009, 2010, and then it steadily, consistently roared higher after stocks recovered from the recession. Now this company hit an all-time high of 148, and now it's at $2. You had the big momentum trade of Wall Street bets trying to pump the stock higher, but even after almost 10xing, no, it actually did 10x in price from 2.7 up to $28, not even remotely close, not even a fourth of the way there back to its all-time high. And once again, you have a faltering business. Looking again, let's look at another example, QuantumScape. This company was all the thrill back in late 2020, early 2021, going out of the coronavirus pandemic, money's flooding everywhere, people are pumping up stocks left and right. And the funny thing is that this company is $132 a share in late 2020, and today it's at 15. 15. That is dramatic. That is almost a 90% downturn. And what is the reason? Well, this company doesn't have a business. This company doesn't even have revenue. To this day, it does still not have revenue. It is absolutely incredible that you see companies like this, even today, trading at a $6 billion market cap, which means that this company was well over a $50 billion market cap just a year ago. Now, you can look at other examples like this, and last but not least, we'll finish out with one that I actually like. This is a company that I don't own, and I don't plan to own right now. I'm watching to see how they pan out. I think it could be a major long shot. This is one of the riskiest business models I've ever considered, and if I do ever buy into it, it will be extremely small. This is a company that is changing the way that robotics and farming. This is basically a company that's trying to change the entire agriculture industry and disrupt that whole business model. Now, who knows whether they'll do it? They have a long way to go. They're a baby company, and they don't have the capital like an Amazon or Apple to get it done, but who knows? Maybe they'll be successful. Maybe they'll be bankrupt in a few years, and that's why I don't own them. But you have excitement in this company knowing exactly what I said. They're changing the agriculture industry. They're going to revolutionize farming. And investors got so excited that they pumped this stock up to $43 a share. And just today, it's trading at $3. $3. Now, will this company ever return? Who knows? But if this company is to ever return based off its fundamentals, it might not be for a decade plus. And the reason why I wanted to show this with all these companies is that if you're investing in successful companies, you may have downturns like the 2000 dot-com bubble, where stocks get cut in half. You may have downturns like 2008, 2009, where stocks get cut in half. You may have a coronavirus downturn where in a 30-day period, many stocks are down 30, 40, 50%. But the moral of the story is, as long as the fundamentals, if the actual underlying business is still set in place, then the company is likely going to do well. We showed some of the best and biggest and amazing performing companies all throughout this decade and even throughout the last couple of decades, like Amazon, Apple, and Tesla, and all these amazing companies that had 50+% downturns. We saw AMD have about a 90% downturn, but they still have become successful, wonderful businesses for investors to invest in. So the thing I just want to say is stay the course. Focus on great fundamentals and don't worry too much about the stock price. I mentioned in my previous video how my performance has been really lackluster and I didn't hit my 2022 goal. I fell about $4,000 short and I am still planning on investing in this and trying to reach these goals, and hopefully I'll hit it in 2023. But the main reason was because of what happened from November of 2021 to today, in just the last couple of months. I was not only in November ahead of this goal, I was actually far exceeding it. I was on track to pass well over 40,000 by February of this year, but I ended up finishing out at 31,000, and that is because in the month of January, we had a negative 21% return from my very highly concentrated portfolio, which is far below the norm, and we had 3 consecutive months of negative performance. So far, February has been a lot better, but you can see the massive gyrations of my growth stock portfolio. Plus 5%, minus 10%, plus 20%, minus 4, minus 13, minus 21. And this is not for everybody. And this type of volatility is pretty much unprecedented versus most people's portfolios, but it's something that overall I think I've handled pretty well. It's not easy to do at times. Sometimes it's much harder than it sounds. But if you just own great companies, you're going to do just fine. If you haven't got signed up already, get $50 for getting signed up in One Finance. It's absolutely free to do so. You'd help support me and my channel, and it's absolutely incredible. Get signed up down below, and you won't regret it, I promise you. But other than that, guys, thank you so much for watching. I hope you appreciated this little bit of a different video. And other than that, I'll catch you guys next time.